All right, so I'm starting to see some people anxious that we've missed part of this move. Um, we got knocked out when the S&P briefly dropped back below 2,800, and at that point, sentiment had just become too extreme. Um, uh, Dumb money is wildly bullish now, and at that point, even though the S&P did pop back above 2,800, it's just it's just too risky. And uh, in reality, you've only got at that point we were only about 4 or 5% from the all-time highs. Uh, I do think we may marginally break above this, but I don't think we're going to get a sustained breakout and then never look back. Sentiment is just too extreme right now for that to happen. We're going to need some kind of correction before we can get a sustained breakout. So I see people fretting over missing a 5% move in the stock market. After this is after we made an 80% gain in 2 months coming out of this bottom in the oil trade. Um, this is not where the big potential is in stocks. I'll take missing 5% in a very risky market any day over uh, waiting and being prepared for where the real opportunity is. So let me convert over to where the real opportunity is. Um, and this is just the way our emotions work. When something is going up and up and up, our emotions tell us that it's just going to keep going up, and we have to get in, or we risk missing, um, a lot of profit. And that kind of thinking is what got um, almost everyone caught at the top of the Bitcoin bubble, the inability to control greed. And that's where we're at in the stock market now. You need to control greed. There just isn't that much potential left in the stock market, and it's just not worth catching. You're playing musical chairs. Sentiment is way too extreme. We're going to need another corrective move, and then that's when you want to buy, is at the bottom of corrections, not after something has gone straight up for almost 4 months now. That's too late. Now you want to be looking somewhere else where something is correcting and building potential. And that's what we have here in the gold market. While stocks have been just going vertical, gold has been correcting. So gold is creating the opportunity. Um, most of the time, an intermediate cycle decline will break the intermediate uptrend line, which I've drawn in here. I'm going to say there's a decent chance this will happen before this is over, but it might not. Sometimes these rounded bottoms, the trend line just ends up being a little too flat for an ICL to break that trend line, but that may not be the case here. It's definitely conceivable that gold could come down and break this trend line over the next I'm going to say we probably got to the FOMC meeting. I'm guessing that everyone is waiting to see if the Fed is going to put a rate hike back on the table sometime this year. Now that the stock market is back at the all-time highs, and so I'm going to say gold is probably going to continue this decline until the FOMC meeting, and either way, if the Fed does say they're considering putting a rate hike back on the table, or if they confirm that they aren't going to raise this year, then either way we should get our bottom in gold. But to try and pick a bottom before that happens, or before this trend line breaks, probably a bit premature. But this is definitely where the opportunity is going to be at, not in chasing the stock market that is now 4 months into a rally. You want to be looking for something that is correcting, and and potentially, you know, going to complete a bottom and then start a rally so that you can get in, instead of 15, 16, 17 weeks into a rally, you want to get in on week one. So this is building that potential. And once the bottom comes, um, we're not going to have 5 or 6% potential in the miners. We're going to have 20 to 30% potential in the miners. And if you have the risk tolerance to use a triple leverage fund, well, then you're looking at something that can produce 30, 40, 50%, maybe even another 80% like we did in our energy trade coming out of that December low. So, try and think logically here. Don't let your emotions control you. Just because the stock market is going up doesn't mean that it's going to go up forever. And, if you uh, hang on too long until the music stops, then you get caught, just like all the Bitcoin traders did. And you get caught in a correction rather than um, um, waiting out the correction like we're doing in gold and then trying to get in at the bottom. That's where the opportunity is. So a little patience here. I think we're building a tremendous opportunity in the metals market. We just need to let this intermediate correction run its course, and then we'll try and pick the bottom of this, just like we picked the bottom in oil and stock market back in December.